Let's go.
All right.
Pump the beat.
What's
All
up?
right.
Good morning.
Well, it looks like we have the EVERGRANDE collapse finally. We're going to be talking about Bitcoin ETFs, Ethereum ETFs, TradFi, macro, all of that. So I'm excited to kick this off today. I know we have an amazing panel, just like always. And I want to welcome everyone today. Thank you to QuickSwap, Polygon for all the great work that happens in the background. So I think we could probably just kick this off, start introducing everyone. What do you think, Rock?
Let's do it.
All right. So just like always, I go from left to right. Let's do like a 20-second introduction, and then we can jump into some of the questions that we have for today. Let's start with Webacy. Welcome back.
Thanks for having me back, guys. I'm Brian, one of the co-founders of Webacy. We are a safety layer for your wallet. Think of us as the Norton for your crypto, if you guys even remember that, if you're old enough. But yeah, we just figured there isn't like a central brand that keeps people safe while doing the things they do every day. And that's who we are. So we're very excited. We're Polygon compatible, of course. We've been huge fans of the ecosystem and big supporters of QuickSwap and Rock and the rest of the team, and excited to be here.
Awesome. Great to have you here, and we'd love to hear that you're a supporter and that you work with Polygon. That's huge. Let's go ahead and pass the mic on over to Tina. Welcome back, Tina.
Good morning. Hello. Thank you for having me again. Happy Friday, you guys. I'm Tina, founder of Boomerang. Boomerang is a protocol that enables you to reach out to any wallet that you like in the space through programmable tokens. So you get to completely customize it and then reach out to whoever you like by just having their wallet address. So I'm excited for this ETF talk, you guys.
Good morning, Tina.
Good times, yeah. And Boomerang is definitely very interesting application, and there's many different utilities. So go ahead and click on her profile and check that out. We also have Zara here today. Let's go ahead and welcome back Zara.
Hi guys, thank you for having me back. I'm Zara, CEO and co-founder of NeoKey. NeoKey is a decentralized matrix platform with multiple components of metaverse marketplace, game engine, digital wardrobe, etc. And around it's focusing around democratizing the world of creativity and design, and a lot around creators economy. I'm also founder of Studios 651, which is a Web3 venture building studio based in Sweden. Thank you.
Awesome. Thank you, Dan. It's great to have you here. And let's go ahead and pass the mic on over to Michael. What's up, brother?
Hey, brother. Hey, lovely people. Thank you very much for having me again. Always a pleasure. Always a pleasure. Best day of the week, honestly. I'm Michael, former VP of Engineering, DApp Radar. Right now, I'm representing autotrading.vip. We are automating crypto investments for trend trading for a longer time. And myself, I'm an engineer, and I read a lot of news as well. And so I have my opinions on topics, especially on the topics that you have on the title today. So I'm looking forward to add some fire, some alpha, and give maybe some trading signals if anybody needs some, especially on Polygon. So yeah, looking forward. Let's go, guys.
Good times.
Big
Yeah,
Mike.
great to have you here, Michael. Yeah. Do your trade signals, do they factor in macro? Is it all the TA?
Bro,
Just
I
wondering.
tried, but it's better if you just ignore it. So I'm more the technical analyst guy and put that into code and no emotions, you know. So it works quite well in this way.
Just straight TA.
Yeah.
Cool. All right. Awesome. We always say we're going to dig into that more, and then we never do, Michael. So at some point, that would be cool to talk about the trading signals.
Look, I'm just saying one thing to motivate you. 50x on Polygon with only 29% drawdown. 50x, okay? Since 2019, okay? So no manual trading, just automation. I think 50x is quite good for that. So yeah, if that motivates you to talk about it, hopefully, right? Let's see. Back to you.
Good times. All right, let's go ahead and pass the mic on over to Tyler.
Hey guys, thanks so much for having me. This is my first time on the show. Really looking forward to it. So, I'm the founder, one of the founders of RWA World. We are a tokenization and RWA intelligence platform and newsletter, bringing transparency and clarity to RWAs, which have quickly become my favorite subject in crypto. On our website, rwa.world, we've indexed over 330 projects. And fun fact of our database, about 14% of them are building on Polygon. I suspect that number's going to only increase. Big fans of what Polygon is doing and just super stoked to be here, guys.
Oh, that sounds like a really cool platform. If you have any threads or anything like that that goes along with whatever we're talking about today, macro, whatever, that'd be awesome to have pinned up above, and then people can also check out what you're doing.
For sure.
Everyone that has a thread or something they've recently posted that goes along with today, that'd be great. And if you just want to put something about your project as well, that works as well. But
awesome, thanks. By the way, I don't know if you saw me. I was trying to coordinate my clap emojis to the music that was pumping at the beginning, so I'm super amped.
We were both pumping up the beat.
It was you and
like
me. I was like, clap, boom, boom. I put in the chat like the gif of that cat that's like bouncing his head. That's me right now. So I'm vibing, guys. This is gonna be fun.
Nice.
Hey, by the way,
we were both just pumping.
Vibing, guys, help us with a retweet, please. Everyone in the audience, all the speakers, get this out to your audiences. Share it in your communities, share it with your families, and let's get the word out that the greatest Twitter Spaces on the planet is live now. Don't miss out. Let them know.
Let's go.
It really is. I mean, you're not exaggerating, dude. It's factual.
I mean, we were voted by, I think, like at least 4 publications, the best crypto podcast of 2023. So
we got to keep it up.
Keep it up.
Good times. All right, let's go ahead and pass it on over to Tasty Crypto.
Hey, what's up, everybody? And thank you very much for having us here on the space. Our first time joining as well. My name is Ryan Grace. I head up Tasty Crypto. And if you're not familiar, we're crypto arm of the retail brokerage Tasty Trade. We have a financial network called Tasty Live as well. So we come from the retail trading side of things. From a product perspective, we're building a self-custody wallet to provide access to a lot of what we think is really interesting in terms of trading opportunities, more kind of speculative in DeFi. And we're launching on Polygon within the next couple of weeks. We're going through the final kind of testing stages now, and we'll have Polygon is a third network with our wallet in addition to Bitcoin and Ethereum.
Very cool. Yeah. Again, anything, any kind of launch threads or anything like that, it'd be great to see those on the Jumbotron. Even for people that come to listen to this space later on, they look through the Jumbotron to find the posts that they weren't able to capture during the day. So, please add anything to the top there that's relevant. Let's go ahead and pass the mic on over to Wooly.
Hello. Good morning. Happy Friday, everyone. Thank you so much for having us. Yeah, so we are Willie, the mammoth of Matic, and after being, locked in the permafrost for millennia, we've finally been released, and we recently launched on Matic about 2 weeks ago. We are a meme project, and just really excited to be here today. Thank you so much for having us.
It's great to have you here, Wooly. And I saw it was a post, I think it was in the All Roads Lead to Polygon Builders chat. There was there was some kind of preserved Wooly in the ice recently. And then, I hear, I don't know if this is true, but I hear some speculation about, I guess, acquiring DNA from preserved woolly mammoths, and they're trying to recreate woolly mammoths. I don't know. Is this true? Do you know?
Yes. So There was a very recent article that came out, on Twitter. It was actually in 2022, but the post just came out the other day, and like I said, it had it went viral, over 15 million views. But yes, there was a baby woolly mammoth that was recently found that was literally encased in ice, and speculative as far as if they're looking to clone or not. But long story short, mammoths are real. We are here, and we are now on Poly. And Wooly is looking to find his way home to his long lost sibling Ellie. We are the older brother. And once again, I'm just really excited to be on Poly and Matic and just have fun and bring memes to Polygon.
Good times. We love memes, and so welcome.
Thank
Let's
you.
go ahead and pass the mic on over to Kevin.
All right. Hey, everyone. Good morning. Kevin Korsdorf, and I do DeFi growth for API 3. For those who don't know, we're a decentralized Oracle network. We're live on 16 different chains. Polygon POS and ZKVM are two of our absolute favorites. About a year ago, we pioneered a concept called OEV, Oracle Extractable Value, and we just released some details on that this week. Basically, what OEV is it's a subset of MEV that is able to be recaptured by oracles and then delivered back to the apps from which the opportunities arose. We just announced that we're going to be hosting our auctions to recapture this OEV on our OEV network, which is a Polygon CDK. So a lot of good energy over here with you guys, and glad to be here.
That sounds really interesting. I haven't had time to dive into that. I saw the OEV post and API 3 and all of that, but I guess in a nutshell, like what is the main application there for like dApps? Like what are they using this for?
Yeah, so basically, like Aave is a good example. So if there's a liquidation on Aave, there's an incentive paid out to perform that liquidation. And right now, block producers are hosting those auctions, and searchers are bidding up to 99% of whatever that liquidation incentive is to win the right to perform that liquidation and make 1% or whatever it is. Basically, what API 3 can do is we can host those auctions at the Oracle level. And so searchers pay us to win the right to perform those liquidations, and then we return those proceeds to the dApp. So there's also other kinds of MEV that exist, front running, back running, arbitrage, but liquidations are probably the biggest as far as what we'll be tackling here. And yeah, I think just in January alone, Aave lost over $4 million of OEV was extracted, or of MEV was extracted from Aave. And it's hundreds of millions of dollars of value over the last couple of years. And this is just going to random third parties and is being extracted from dApps users or LPs. And this is a huge thing that we're tapping into and want to give back to the dApps from which it came. So I've been hard at work with this for a pretty long time. And I just released a little bit earlier this week and couldn't be more excited to release more and maybe keep coming on here and show you guys how it goes.
Wow, that's definitely important, and that can save people a lot of money there. So, yeah, welcome, and thank you for the explanation. I think it looks like the panel is switching around a bit. I think someone dropped off recently, and then it looks like Polygon is reconnecting. Darren, I'm not sure if you want to let them know they dropped off, and I think Crypto Rain. I think you're back.
Yeah, what's up, everyone?
Good morning.
Yeah.
That was a quick intro.
Good morning,
Tell us
everyone. Yeah, Crypto Rain here. I'm a crypto investor. My background prior to crypto was investing for 20 years. When I found crypto, I saw a thing with a relatively short cycle with massive volatility and a technology that is absolutely going to change the internet, and had my full and undivided attention for the last 7 years. Really excited about Polygon. I was an investor in Polygon back when they were Matic. It's done incredible things, and one of my biggest favorite narratives is blockchain gaming, and Polygon has positioned itself exceptionally well to do well as blockchain gaming takes off. So most of my focus is crypto, and this technology is the best chance for massive gains if done right. And unfortunately, most people don't do it right. but if done right, to change your finances in what is normally a short period, about 4 to 8 years. And normally other investment vehicles like real estate and stuff, that's more of a 15 to 45 year journey, and crypto can do it much quicker. It seems slower than everyone wants because we all want to go to $10 million in 6 months. It doesn't happen that way, but it can over 5 to 8 years. Thanks for inviting me.
Sounds good. Well, looks like we'll be picking your brain here today with all this macro kind of conversation and news things that are coming up. So yeah, welcome aboard, and welcome to everyone else that's in the audience. We have a bunch of great people here in the audience that I know very well. There's Patrick and Nioki. You got the Panda Doodleverse and Doge Chain, Crypto Vixen, and Ethos, and on and on and on. There's so many great names here. Bunch of great friends, Manny B Investing. So shout out to all of you there. And let's go ahead and kick this off. I think we're ready, Rock. You want to dive into these questions?
Yeah, I know we have a lot of requests, guys. So we'll be bringing people up throughout the show. If you're waiting to come up and speak, yeah, we'll bring people up as time goes on. We'll drop some people, bring some people up, and yeah, we've actually got a few very large and very smart speakers who know a lot about this subject coming in a bit too. So we've got a few special guests that'll be popping in. But yeah, let's get started, guys.
All right. So just some quick housekeeping. If you're new to this show, we just have everyone kind of jump in as you see fit. You don't have to raise your hand. Just go ahead and answer the question or jump in. We just like a really easy flowing kind of conversation. So there's no rules. You can agree, disagree. We like the crypto banter. So let's go ahead and jump into this. I think the first question here, let's go ahead and start it off with Bitcoin ETFs. The reason why is because we covered Bitcoin ETFs, way back when they went live. But I think we have a different perspective now that they've been trading for a little bit, and I'd like to kind of pick your guys' brain to see how you guys feel about them now. So, how do you foresee the approval of spot Bitcoin ETFs impacting the mainstream adoption of cryptocurrencies? And you can kind of take this different ways, either from a speculative, like price kind of standpoint, or even just, more general, like, do you think this brings more legitimacy, et cetera, et cetera? Anyone can take this. Michael, you already have your hand up, bro.
Yeah, man.
Go ahead.
Yes, because everyone will jump in otherwise. Like everyone is like, I want to say something. Listen, I think to keep it kind of shortish, the ETF is mega bullish. I mean, I'm not telling you something new, but let me tell you why. Because sure, short term, there is selling going on and all these things, but it's not selling because Bitcoin is bad or anything. It's just because of GBTC and this stuff. But there is no real negative news. If you look at the numbers, you see that the inflows are actually positive. Meanwhile, you see that GBTC sales have slowed down. It doesn't mean that they will not sell anything, but it drastically slowed down. I have a graphic in front of me. I might actually pin it up top later on. And what you see is basically advertising now happening for the Bitcoin ETFs. Now you can advertise now finally on freaking Google Ads for Bitcoin ETFs, which was actually banned because when you try to put such words into your copy, they would not allow you to save that ad. Okay, now you can. So what is happening now is smart people that manage funds and they have clients. They now suggest their customers to have a little bit of allocation into Bitcoin ETFs, right? 1% to 5%, right? They're running around with such numbers. Some people like Kathy Wood says you have to have, what did she say yesterday? I believe she said something about 15%, something like that. So maybe that's too much for most people, but with all of that,
That's very bold of her, and I like that. I like that she's not scared to say it, because we all, like, even myself, I've caught myself telling, like, affluent investors that I know that are not in the crypto space, hold at least 1% to 2% of your portfolio in it. And for me, that's my way of like trying to get them as a gateway drug to just try it. But I like that she's got Kathy Wood's got some balls.
Some balls.
She's telling
Yeah, I
people
know what you mean. Yeah, she's
15%.
really bold. Yeah, and I think it's cool. And so somewhere in between, right? Go, worst case 1%. Okay, honestly, like who would put less than 1% in Bitcoin? Nobody. Okay, so take that, multiply numbers, and it's super bullish. Of course, short term, people lose money because they go with the narrative. And then Aztec asked me before, do you look at news? No, I don't care about news because news are wrecking people. Like you always come late when you go with the news unless you have some insider information there. So we had sell-off when the ETF started because GBTC could finally sell. Nobody talked about that shit before. Okay, so yeah, go read news. You're not gonna know that anyway. So I think if there is no black swan or some kind of mega negative event, recession or whatever, then Bitcoin should actually go up because of that. And quick thing about recession, by the way, the narrative is, and now not because crypto bros are saying it, but because Larry Fink is saying it, is that Bitcoin is digital gold. Now you have recession, gold goes up. Usually, right? If the narrative sticks and Bitcoin is digital gold, you also go up because that's what they're talking about, right? That's how they sell it, right? So even if recession comes, you expecting Bitcoin to go down? I don't think so. So that's my take.
Yeah, I'd like to speak on this if it's all right. The Bitcoin ETF was one of the biggest foundational earthquakes that just happened. And oftentimes, as human beings, we overestimate what will happen in the short term and massively underestimate what will happen over the long term, especially with the grayscale selling that has been used to get people scared. But the big smart players are buying massively. They just don't tell you they're buying till later. And if you look at the amount of Bitcoin being picked up by these ETFs, it is crazy. And we're going to run into a supply crunch where there's not enough supply. In fact, we're already hitting some of that because a lot of the people that were selling from Grayscale have sold, and there might be a little bit more selling, but we're going to see massive pickups and the selling is going to stop in Grayscale and it's going to switch. And I expect that we're going to have a bigger bull run, maybe December this year. But with what I'm seeing, that might accelerate. And I hope it doesn't accelerate. I would love it to be December or later because we're still at a point that even though things have gone up a little bit, everything is massively on sale. And I think about the space as an investor, and I like buying cheap. I don't like buying high, hoping it goes higher. I like buying cheap. And all the really big players are right now buying cheap, and they know this is cheap. They're just not saying it. Jamie Dimon is saying the stuff he's saying. Why? Because he doesn't want to let on that him and his friends are picking up more Bitcoin at these prices. They'll later sing its praises as it goes high because then it will be selling point for them. And so the smart investors are picking up at these prices because they know what the ETF is going to do. Look what happened with the gold ETF when it was approved. Now, gold doesn't truly go up in value. It's relatively the same amount of gold that was used to buy a nice suit 2,000 years ago as it is today. So it doesn't really go up in value. But then when they did a gold ETF, it went down for a while. It went up leading up to it when it was actually approved. For 10 months, it went down and sideways, and then it 3x'd. And that's gold. Gold should not 3x. What's interesting is as gold's price goes up, more people mine it, so the supply increases. Bitcoin can't do that. And so if gold 3x'd, what Bitcoin is going to do is going to be crazy. And Bitcoin is a driver for awareness. What happens is people just kind of sit on the sidelines. They don't think about crypto till all of a sudden Bitcoin hits prices that they never believed possible. It wakes them up. They then get in and research like, what the hell? Why is this not or going up so much? It shouldn't go up so much. And then they start realizing, oh my gosh, there's this revolution going on with the internet that I was completely unaware of. I thought it was about whether Bitcoin would replace the US dollar. I didn't realize these other things were happening. And then they get FOMO. First, they buy in Bitcoin as a gateway drug, and then they actually throw everything into crypto. Not just one, I'm talking about mostly Main Street, not just 1%, but sometimes 20, 30, 50, 80% of all their assets into crypto. And it causes a massive wave that happens every 4 years. Now, this one may even be bigger because the ETFs and what that is going to cause, because for the first time, we will have mass institutional adoption. And it's starting, but I imagine institutions are going to have some FOMO too. That some of them at first are going to put 1% exposure in, but as it goes up, their investors are going to demand 5% exposure, maybe even 10% exposure. And it could cause Bitcoin to hit prices that break the pattern that's been trading in, because it should go anywhere from 90 to 180 or 200,000. We might just have a super cycle because the convergence of a few different things, blockchain gaming, the Bitcoin ETF approvals, and the normal market that we were going to have already, plus the money printing that's going to happen this year, not just in the US, but in China and Europe. That's my thought.
You
I love
didn't
to
even
hear
mention
super
Bitcoin
cycle.
halving.
Yeah.
Bitcoin
Yeah,
halving also.
Yeah, I was about to.
Well, yeah, the Bitcoin halving
Yeah, jump
does
in,
tie
guys.
into the 4-year cycle. Yeah.
So I'm especially interested in like the way Fink is talking about this, Larry Fink, and you mentioned of the JPM guys and the TradFi folks. They'll publicly praise this asset class as the point at which they're selling it. So their activity doesn't surprise me, but it's also cool to see how they'll turn their tune around, like Larry Fink has done with the Bitcoin ETF. And one thing I found really fascinating about his comments on CNBC was how he was talking about how this Bitcoin ETF is just the beginning. And if we could take a step back and think about what the ETF did to innovate financial markets, it's pretty compelling because mutual funds were previously the only other vehicle you would choose if you wanted a diversified asset that would trade, with one share. But the challenge with them is that they don't have this intraday liquidity. And so ETFs came along and essentially democratized access to investments in a way that previously hadn't been done. And Larry Fink, when he was in that interview, he said, let me be clear, I think ETFs are just the first step of the technological revolution of financial markets. And so he was talking about how ETFs have transformed every asset class. Like if you want to get gold exposure, you get the ETF, like you had just mentioned. But then he's like, to me, this is just the beginning to the tokenization of every financial asset. And that's one thing that we're really focused on at RWA World is why are people so excited about tokenization? And for Larry Fink, the words he used were that tokenization can eliminate all corruption. People are spooked by the compliance aspect.
He said that?
Yeah.
Wow.
I posted it in the chat here. I don't know if somebody can put it on the Jumbotron, but his exact quote was insane. Like, I'm going to read it to you word for word because it was so massively bullish and it got a couple of headlines, but I don't know if people are talking about it enough. He says, so in talking about the Bitcoin ETF, he's like, these are just stepping stones towards tokenization, and I really do believe this is where we're going to be going. Think about this. If you had a tokenized security and you have tokenized identity, the moment you buy or sell an instrument, it's known. It's on a general ledger that is all created together. You want to talk about issues around money laundering and all of that, and here's the best part of his quote. He says, this eliminates all corruption by having a tokenized system. And so we know that BlackRock, JP Morgan, and all these guys are doing these tokenization private blockchain experiments. They've been doing them on different chains and things. Onyx is one of them that they're talking about. This is what they're talking about. It's the ability to deterministically understand if the buyer or seller is in compliance with that particular token using whatever particular ledger and standard they have. And so there's a ton of fascinating investment going on behind the scenes while people like Jamie Dimon are saying, hey, Satoshi is going to come and make all the Bitcoin disappear. Well, meanwhile, they're doing their tokenization innovation lab, right? So it's important I love what the last speaker, Crypto Rain, had mentioned. Like, look at how they're talking, but also understand their actions and see what they're doing behind the scene, because not only just is this bullish on Bitcoin, this is bullish on the concept of tokenization itself. And of course, Polygon will be a massive beneficiary of that.
Are you saying that Jamie Dimon, were you saying Jamie Dimon was talking negative, but Larry Fink was being positive? Or are you saying
Sorry.
Jamie Dimon was being negative, but his company was it his company?
Bingo. Yeah. I'll make it clear because I wasn't very clear on that. So Larry Fink, BlackRock CEO, super bullish on Bitcoin. He's come around to the concept of digital gold, like Crypto Rain had mentioned. And BlackRock is involved in some of these tokenization initiatives. Now, Jamie Dimon's a little bit of an interesting case. He's a little bit different. He publicly is, against Bitcoin, and recently had some quotes where he was just talking to CNBC and saying, oh yeah, like I don't believe that you
We
can
said
trust that
Bitcoin
there's
no value. Yeah, he's very good at shitting on it and then doing everything on the back end to gain from it.
Bingo. And that was the point I was making. So JPM and BlackRock both might have different language, but behind the scenes, they're both working together on the Project Onyx tokenization platform.
Wait, they're working together on this Onyx thing?
Yeah, JPM has the platform Onyx, and then one of their clients is BlackRock. And it's like it's not
what is
talked about anymore. It's
Onyx is JPM and BlackRock working together on tokenized.
Yeah, private ledger. I'll see if I can find a tweet for you on that. It's on their website too if you look it up too.
Private ledger though? Like what does that mean exactly? How private? Permission?
Well, like everybody has to be KYC to get onto it, right? So they're not building on Ethereum, they're not building on Avalanche, they're not building on Polygon. They're building in their own closed loop environment, and they're making a ton of hires in this space. Like if you Google Project Onyx, ONYX, and JPM, you'll find a bunch of really interesting stuff. My LinkedIn is blowing up with people who are like, "Oh, I'm joining Project Onyx, and I'm working on private ledger tokenization," and it's really cool. Like we're all fans of tokenization, but it's totally the case that the Bitcoin ETF, I think, was the Trojan horse of tokenization.
I'm not the biggest fan of these permissioned networks, but I suppose it's still a positive in some ways.
They're using it to settle transactions instantly, rather than the 2+1.
Yeah, T plus 2 or T+3.
T+2, sorry.
On the wire. Yeah.
So I mean, they still need to do the T+2 because of the law, but I think doing it instantly internally is a good experiment. They call it a tokenized collateral network, so I think there's a piece to that too. And you're right, it's not. It's private. It's not permissionless, and it's not exactly something that we can all benefit from.
But my thinking is like they can't ignore the public liquidity of public blockchains forever, right? So I feel like at some point there's going to be some bridging happening.
They'll have a portion of it go on to the public blockchain.
Exactly. Yeah. Kind of like how you have a private internet and then the public internet.
I think I just want to add something that probably...
I'm the most excited, by the way, guys, for the institutions to allocate retirement funds, 401ks, et cetera, into this. And I think it might create more stability in some of the less volatile moving or trading, because people are just holding on to this for like hopefully decades because of that dynamic. So I'm waiting to see the shoe come down on people approving those decisions. I don't think ETF gets approved and then instantly endowments are like, let's buy. It'll take some time, but I want to see what that looks like. I'm the most curious to see.
Real quick, Zara, say something, and Websy, tell us if you can hear her.
Yeah, I just wanted to add something here that probably
can't hear her.
Okay, I think you're rugged. Yeah, she was speaking and you started speaking over her, but so pause for a second, Websy. We'll let Zara say something, and then we'll come back to you. If you want, why don't you just drop down and come back is probably the best.
Yeah, exactly.
That's the way we said it. Yeah. Okay, and
ahead,
I know Tina's had her hand up for a while as well.
Everybody's putting their hands up today. Everyone's being polite. Just feel free to jump in, guys.
Yeah, but you got to throw your shoulder in. You got to throw your shoulder into the crowd and
push the next guy out of the way.
Tina, throw your shoulder.
Yeah, it literally feels like one of those raves you're going to.
Exactly.
At least nobody's sweating, so you guys, thank you. I just wanted
I don't know. Speak for yourself. No, I'm kidding.
I think the Wizards saved the space a little bit. But anyways, I just wanted to, provide my thoughts on the ETF. I feel
wait, Tina. Sorry, Zara was trying to speak now.
I'm so sorry.
Real quick.
I'm not quite confused.
Zara,
am I not?
Zara's chopped liver. Go ahead, Zara.
No worries. I mean, I have a lot of points now after all the great speakers giving their comments on the ETF. I think I definitely think the Bitcoin ETF is going to accelerate institutional adoption of cryptocurrency in general. Because I think it will eventually lead to a greater liquidity and more legitimacy for crypto for the traditional investors, basically. But then, as a side note, some of you already know in the room, I have a PhD in blockchain adoption, and I have done a quite long research in adoption of blockchain technology. And the funny thing is that, of about 400 plus companies that were part of my research, as one of my last basically foundings that I added when it came to adoption of blockchain was that majority of these companies thought, and that goes back to 2021, 2022, that these if there would one day be a crypto bounded investment vehicle introduced within the boundaries of regulated markets, the institutions would come in, and that would really push the mass adoption. And that's exactly what we see with Bitcoin ETFs, right? So in that sense, I think that's a great. Although if you go back to those of us who are probably in the space for a long time, I've been in crypto space since 2012. And at the beginning, for the first few years in this space, I don't know if you were all like me. We were like, oh, no governments, get rid of them. We want pure decentralization, no house of control, right? We were all like pro that, and then eventually we learned that, oh well, we need to get along, and we need to work together, and that will eventually happen, and we have to have progressive decentralization. So in that sense, I want to relate that to private and public chains, and have probably a different opinion of from many of the blockchain experts. I'm more of a technical person. I'm a blockchain solution architect in my expertise. Have been building a lot of blockchain solutions, both enterprise and public. A lot in gaming on permissionless chains, but also a lot of enterprise solutions in healthcare, supply chain, and tokenization of solar energy, etc. And I think I don't see any problem with actually private chains. And I think the core concept of blockchain is bringing transparency, and minimizing corruption, and having a decentralized peer-to-peer connection. And that can be of any size of community. That can be to public, but also within an institution. To use it internally, that's also amazing, right? For your own purposes, that's also amazing. That's like how, for example, UNICEF is using private ledgers for democratizing their own financial system internally. So or building hybrid systems. That's something, for example, I did with the government of Mexico a few years ago, building a hybrid system for healthcare and telemedicine to provide access to most remote rural areas for users. But then also it had to be a hybrid, because we were dealing with highly sensitive healthcare data. So I'm actually pro both. So I'm not totally against private ledgers, and I think we definitely need them, and they will definitely also push institutional adoption and mass adoption for sure.
My concern with private ledgers, and maybe there is some place for them. I've always been pretty against these like permissioned private ledgers. The first one that I was like even relatively okay with was Base, and that's because the permissioning is happening at the builder level to try to prevent like rugs and things. But you don't need KYC to be on the chain, and you can withdraw to Ethereum, which is very important. So that's why Base I'm more open to. But when you have things like Hedera and some others that are trying to make these closed, like walled gardens, I'm just not as interested in those. Maybe for like some kind of military, things, or maybe there's some things that'll be interesting for, but I don't think it's generally interesting for the general public, the world, because like we saw this, as someone mentioned, I think Tyler maybe mentioned earlier, with the early intranets, and there were some people betting that intranets was the way the internet would go. These private, like closed systems, and there are still some in existence. They still, we still use them to some extent, like maybe a company that has highly sensitive information, military. I'm not sure if these are intranets, but I know my Marine buddy was telling me, he was IT guy. He was telling me about, how they don't allow outside internet on when he was in Afghanistan and Iraq. He would run the internet for the base, and it wasn't allowed to touch outside world unless someone gave him a favor. Then he would let them use outside internet. But anyways, so there are some like niche cases, but that's not where the internet went. So I think the people who bet on these like internal walled gardens, because they thought the internet was just going to be too much chaos and not controlled, and there would be child porn and terrorism and drug selling and all these crazy things on this. You can't have an open internet. It was a big narrative for a long time. I remember it.
It's so true. And I feel like Web 2 has unfortunately gone more in that closed direction, though, where you look at the value accrual for a lot of the apps that people know and love, like Facebook or Spotify or Google. If you look at like the FAT protocol thesis, if anyone's ever read it or seen it, it's this idea that the value for the current version of the internet accrues to these sort of closed networks, right? So Instagram is controlled by Instagram. It's not decentralized. And Facebook is controlled by Facebook. And you're on there and it's a closed system where you don't own a lot of your data. They control it. And so it's like you kind of mentioned, Rock, the difference between like closed and open source. And we like to think that open source wins out. But in the example of the internet, like these protocols, TCP and HTTPS, like Facebook benefits from that, but the value doesn't accrue to HTTP, it accrues to Facebook. And so the idea of building stuff on public permissionless blockchains like Polygon and others, where you can actually accrue value to the actual networks themselves and anybody can participate in the networks, that's what's really cool about this concept of Web3 and owning the rails. And I think your point is solid that like long term, because we're sort of building this new financial system and this new value system, value will accrue to the more public and more liquid chains. But I do think you can still see examples where you may want a private chain to manage some trade finance or your own, like Zara mentioned, highly sensitive health data. And so I think the option to opt in and out of these systems is what's so important. What we really must fight is this idea that there's going to be some KYC chain that all of us must participate in and must put our highly sensitive information into. That is the system that we should fight. We should have the ability to choose between these different areas. Like you can choose to drive on a toll road, a private toll road, when you're driving to the concert. But if you want to go on the back roads or you want to go on the public highway, you should also have that choice.
That's where my worry comes in. Go ahead, Aztec.
Isn't it safe to say that basically if blockchain, Web3 follows the Web2 path, that there's going to be a little of everything, and there's no way to really stop it. Just in the same way that there's intranets, there's the internet, there's the dark web, and I guess there's certain ways to stop certain things, but like for the most part, this experimentation just keeps going and going. So I think like we worry about certain chains, but I think at the end of the day, with the internet, the market and the people kind of choose on some level, at least.
For sure. And me, Aztec, a lot of things we talk about, I'm all about giving, people optionality. It's one of the reasons I think that ETFs, aren't the Bitcoin ETFs. Some hardcore Bitcoin maxis will say that, it's a bad thing because it's now to do it. One, you need to be KYC to hold it. It's not self-custody. It's institutions getting power in Bitcoin and all this stuff. And I say I think it's fine because it's optionality. If you want cold storage, you want self-custody. If you want to use Bitcoin in the traditional way, that's fine. But some people don't, and some people can't, including like, businesses with prospectuses that say, hey, like you can only hold, X, Y, Z assets, and ETFs is one of them. So optionality is a great thing, but we have to be careful with these permission blockchains and with KYC blockchains, because what happens is it becomes this slippery slope where as that becomes, if they could normalize that, then they start pushing it to other areas of crypto. If they start saying, oh, well, you need a KYC for this, well, then maybe next they say, well, you also need if you're, Uniswap and you're hosting a front end, you need a KYC people. If you're Aave, you need a KYC people. So I think we need to it's important that we do try to resist some of these things, because if we don't, before we know it, Web3 can have taken the path of Web2, which is Web2 became really, it's a glorious and beautiful thing, and it's been one of the most incredible things for humanity ever. Like, hands fucking down, the internet has been one of the greatest things that humans have ever had. It spreads information. People, you can be educated. I mean, you could get like better than a PhD like degree on YouTube. And I know people might laugh at that, but if you're on the right areas of YouTube, you can get some great information. And then there's, of course, 100,000 other platforms you can use that are more specialized for certain things. But if we don't keep pushing for like privacy type things, decentralization, if we don't fight for those things, they'll slip away. And I think that happened with the internet. It really got centralized around a bunch of large companies, and we've lost a lot of the magic of the internet over time. It's still an incredible tool, the best tool on the planet. Really, I would say it's the best tool on the planet. Like,
That's why we have to
as
be better
important as
about
electricity.
communicating our values. It's like we could lose them. You're so right. Like, what if we just didn't teach people about the values of decentralization, and then Web3 goes the path of Web2, like you said? Like, that means
Yeah.
it's up to us, the people on
But
this
do
stage and the
people
people in the
care,
audience.
you guys? Like, I feel like with the internet, what Rock was saying, you know, what happened was people just didn't care. They didn't want to deal with it. They didn't want to learn. They didn't want to, if it was too complicated, they just didn't want to deal with it. So they kind of just gave up power and control, just so if anybody can do it, you know, as long as you can get it done for me, then I don't mind. And I think that's why we gave up all of our data, all of our power that came with the internet. So with Web3, I mean, I know that we're all advocates of decentralization and everything, but I also understand that, you know, mainstream really does not care about that kind of stuff. So I think, you know, I kind of agree with
I think it's
Zara
education.
that
I think people, I mean, people talked about, you know, there being a privacy type class in elementary school, like sex ed. Like, I think people just need to know that is something that is being exchanged. And same for Web3 is, if people are educated, they can make that choice. I'm going to take a sterile version of this asset through an ETF and not deal with all the other stuff. Or I can actually buy Bitcoin myself and, you know, store it in my ledger. Right. So I just think we have to educate. And I'm worried. I mean, there's two things. The ETF, I'm concerned it does sterilize it a bit, obviously. But for those who are buying it, at least there's now liquidity. But I'm hoping there's enough education that people, it's like a gateway drug. Oh, I'm very curious about this asset class. What else can I do here? And then, of course, then you dive into everything else. So,
I just
Tina,
want,
Tina
yeah,
brings up a really good point,
sorry.
in my opinion. You know, like, do people care? And I think to a large degree, people don't care nowadays. But the thing is I think if, like, at the surface level, but they do, you know, at the deepest level, people do care about privacy. People do care about, you know, losing, you know, fundamental rights, or et cetera, et cetera. When they really have to think about it. But I also agree. I think it was Websy, you were talking about, you know, education. I think that we need more education around these things. I totally agree. But I think it needs to be a little bit different than maybe some of the education we've received so far. Like, we need to start from, you know, maybe like the children and move up kind of thing, like where you maybe start like an animated series, you know, about decentralization, and you know, you start like kind of bringing it to people in a very like a digestible way, a friendly, a fun way, not so technical. So we need more of that as well. And then I think it will open their minds. They'll just hear a story, because storytelling goes a long way. They'll hear a story of something
we need like a Smokey the
and then
Bear.
adopt it. Yes,
Man,
exactly.
my brain is
Yeah.
running wild with like ideas, because you know what? I don't see any cartoons that talk about like our fundamental
None.
rights.
Yeah, we
Yeah.
need the
Other
NFT
than that
community to
Bill
Well,
do
a
this.
lot of it,
video. What was that Bill that was like walking around on the Capitol Hill? Remember that
Yeah,
one?
a
Yeah.
lot of it, our rights slipped away,
that's a good
almost like the
one.
boiling frog analogy with Web 2. I think even myself, I wasn't aware how much data was being collected on me. And then when they started screening people off social media platforms, I was very concerned, even though like the one person they really started the chain with The government was then, because so much power went in the hands of so few with social media, they were then able to choke point those specific platforms and decide who would get to speak and who wouldn't. So you're very right. Like Rock is very on top of and aware of like the problems with more centralization. And there are those who will push for complete KYC, complete centralization, because once the government gets certain powers, they do not easily let go of it. And they want control. Why? Because they don't want to have to win an argument. They don't even want to have the argument. And so blockchain like does increase transparency. It also increases, especially public blockchains, things that like allow people to speak their mind. Do you notice that the SEC went after a little company, like one of their first targets was this little company called Library Credits. Its market cap was maybe 4 million or less at the time, and yet they attacked them first. Why? They're a competitor to YouTube. And so they don't want free and open, unfettered free speech. They don't want complete permissionless societies. They have, especially since the anti-terrorism laws, they've been able to KYC everybody and control and lock down. And they're trying to, certain ones, take away your ability to spend. And so they're the ones that are fighting blockchain. They're the ones fighting this permissionless system. And so far, they're really losing. And hopefully they lose the greater battle. But there are a lot of people just unaware that this battle is going on because it hasn't impacted them yet. When I saw things happen with that truckers rally in Canada, whether I agreed with truckers blocking off some of the exits or not to, with their rally, I didn't agree with that necessarily, but I especially didn't agree with the government freezing their bank accounts. And so crypto takes away that power from them, and they don't like it because once they get something like that, they don't want to give it up. Now, there is a place for permission blockchains. Like I work very closely with a project I'm heavily invested in. It's called Devio, and they can do 8 million transactions per second. And they are a private blockchain or a permission blockchain because healthcare will require something like that. Like even in the US, you can only store healthcare information for a person in the state that they're in per law. So they can't be on Polygon. So there will be certain use cases for permission blockchains,
Can
but
I
hopefully
can I pause you
permissionless
Supply
there?
chain
takes
management.
off. Permissionless, that genie is out of the bottle, and we should never let it get put in because we need permissionless. And Polygon is really doing a great job leading that. I'm a little bit concerned with some of the directions ETH is going. I have not seen Polygon go those directions, and I'm very pleased about that.
I want to jump in there. I actually would disagree. I see what you're saying about the privacy of healthcare data. This is clearly a requirement for many areas of the world, but there are ways to do that without a permissioned or private blockchain itself. There are ZK, zero knowledge technologies that can be used on public blockchains just fine, right? We saw Tornado Cash, they got shut down because the government didn't like that.
Mhm.
But there are plenty of others.
This is
Secret
also
Network, Manta, which everyone's hearing about right now, a Polygon chain, they are focused on privacy applications. So what you can do is you can actually put private data on a blockchain, but just put a face mask over it, a zero knowledge face mask over it, and then you can selectively access that data if you have the permission to do so, or that data can be selectively exposed if you choose to give it out.
We don't disagree
Go
on
ahead,
this. It's
please.
a great point. We just need to get the politicians to change the laws because you're right on the direction it should go. The question is that the direction the politicians will let it go in the short term? Probably not.
No, it won't be
I
direction. Definitely, it's not the direction that politicians will let it go. And if you look at EU now, digital ID, that is going to be a compulsory thing for all EU citizens. That's exactly what some of us mentioned here. That if we are forced to be on a KYC chain, that's exactly where this whole technology is being abused basically, or that's the direction we don't want it to go. And no one is even really talking talking about this. I am myself an advisor to EU, and I have been raising this concern multiple times, but I don't hear anyone talking about it, and no one really cares about it. And then we go back to the question of Tina: do really people care about that? And the fact that we are all sitting here seeing, including myself, right, saying, for example, Bitcoin ETF is a great means for mass adoption or institutional adoption, etc. But if I want to be brutally honest, I don't usually say this everywhere, but here I trust the room. I can be brutally honest. Deep inside, I wasn't really happy about Bitcoin ETF. I was not happy, because I thought, well, this is not what we wanted with Bitcoin. This is not what we wanted with cryptocurrencies. This is wrapping cryptocurrencies and decentralization, wrapping it up with centralization again, right? This is bringing it back to regulate the centralized markets. But now then we just convince ourselves, make ourselves happy that, well, this is going to help institutional adoption. But we should have probably fought much harder to make regulators regulate our own decentralized concept, not to have a totally conflicting solution. Wrap up Bitcoin in with ETF in the centralized stock markets. So I think there is a lot of course, the core ideas of decentralization and also crypto that we really see conflicting things happening. But also I personally believe, I don't believe in pure decentralization, and I don't believe in, of course, centralization at all. That's why I'm here. I think finding that perfect balance is the right direction to go. But finding that perfect balance is so difficult, is so complex and complicated, that of course the more I prefer to lean towards more decentralization here, to actually wanting to say that I want a perfect balance. But deep inside, the perfect balance would be the right way, because pure decentralization, if you look at humanity and history of human being, we were all living in a pure decentralized fashion before agrarian era, that we started having societies, etc. And that failed. And then we came back to centralization. That is failing for sure now as well. So we need to find that balance. But then, we just sit here and, we really don't care. All of us here also recently don't really care much about, for example, our data being gone away to all these centralized platforms. We are still using them. We are still using them with the exchange of our data. And I recently actually did like a quick calculation and released an article on this, that every one of us annually basically generate thousands of data types, and only on 30 of them, the most common data types like traveling, food, transportation, things that we all do, we could generate around $3,000 to $3,500 a year, and that would eliminate poverty in 48 countries. And that's exactly why you should not own your data, because if you start owning your data, you would start wanting more, or you would start want to monetize it in the different way, and that's exactly them losing control.
Yeah, Zara, I want to introduce Adrian here, but just to comment on that, I'm not sure if I agree with your assessment that because your data, may be worth $3,000 to $3,500 a year, that it could get rid of poverty in a bunch of countries, because I'm assuming their data is not worth that. If you're in one of the lowest poverty countries, your data is worth much less than if you're a United States person, right? Because you're just not buying as much stuff.
But you
But
have
I also like
the threshold of poverty is about $200. So even if it's less, it will reduce poverty tremendously.
Yeah, I like the point that Zara made about finding a balance, and it's hard, but I think that balance is important to try to always strive for. Like even in the body, your body's always fighting for homeostasis, to kind of quote a medical kind of term, and I think that's the kind of thing that we have to do in crypto, is always be fighting for a balance. Before we introduce Adrian and also David here that joined us on the panel, let's just go to Tina, because she's been trying to throw her shoulder in, and people just like they're just lined up. It's like a brick wall for Tina today. So
Yeah,
Amazing
I
panel
don't
today, you
usually
guys.
I hate
I
to
don't
brick wall her, but just to be Adrian doesn't have very long. So yeah, Tina, we can come back to all these topics, but do want to introduce Adrian soon. But yeah, go ahead for now, Tina.
No worries. If you guys want to go to Adrian, I'll be here. Adrian, hi.
Hi, you sure guys about that? Don't you want to let Tina speak?
Go
I'll
ahead,
go real
Tina.
quick. Yeah. If
Ladies
it's getting
first. Ladies
awkward,
first.
I'll go real
Adrian's being a
quick.
gentleman.
What I wanted to kind of touch on real quick was, first of all, Rock mentioned that we don't need permission blockchains to be able to, have kind of a transmit private information, and that's something that we're actually working on with Boomerang through private IDMs, input data messages, so that encryption and decryption through the user's private keys. So you need your private keys to be able to basically open the message. So that's something that we've already done actually, and you don't need it. But I do agree that maybe for
Wow,
more
that's
operational
really
stuff.
cool, actually.
Hey, thanks, Rock. Yeah, I'm super excited about that because I think it will be used in many different ways. Whether you want to store your information, you want to transmit, high security, high private information. I think that's super useful. But yeah, other than that, I
So
wanted
the
to comment.
difference there is between. So for people who don't know, Tina works with Boomerang, and they are doing on-chain messaging. So think email built into your public account. But what you're saying here is now typically those messages, like if you sent someone a message on Bitcoin or on ETH previously, in previous iterations, people would the whole world can see the message. It's just like for the world to see. But you're saying now you're making it so only the actual receiver can see it, and they have to sign a transaction to prove they're the owner of that address.
Exactly, just as an option. So it's still our platform Boomerang is still a platformless, unrestricted. So your end receiver does not need to be signed up on Boomerang or anything. You just need to have their wallet address. But yeah, so now before now you would see the input data messages on chain like everything else on the blockchain. But now we have the option of making them private so that you can only check it with your private keys.
That's super cool. Okay, Adrian, yeah, go ahead and introduce yourself. Hello.
Hey everybody. I'm a little bit lost on the super interesting topics that you guys are discussing. I'm probably too stupid to chip in on that, so I can just ramble about the markets, which is what I do for a living.
Yeah, tell us
My
who
name
you
is
are.
Adrian. Yes, my name is Adrian Zdunchik. I am a CMT, charter market technician, and I lose for a living. I lose money all the time, and somehow manage to be profitable, which is quite difficult. And I'm a trend follower. Trends are infrequent, but they are very rewarding. There might be some background noises. And as a matter of fact, I do enjoy each and every single space that I'm on, always from QuickSwap. And I see some friends from Polygon. I see a lot of good people up here. And thanks also to Tina for highlighting and spreading, kind of like anchoring a couple of cool words for me to learn on. I'm not a fundamental guy. I tried my best to keep the track of all the incredible technology and the blockchain development and the layers and the trends in those aspects. However, as an investor, as a trader, I do choose and I do have to abide the principle that the market is a discounting mechanism, right? And then the market sort of like discounts most of the fundamental information, if not all, unless it's unavailable to the public, unless it's insider information, unless it's insider trading, like most of the U.S. Congress people do, apparently. Check Nancy Pelosi and so on. So at the end of the day, whatever value is embodied in those fantastic fundamental messages coming from Tina and coming from everybody else, I'm happy to comment on the market side of it and how market translates and spits out the information in terms
I
of the
guess it's
price.
a good time
let
for
me
us to
I can ask another
pull back
question.
to the main topics, which was Evergrande and the ETF and macro. But yeah, go ahead, Aztec.
Yeah, let me toss this question to you, Adrian. Being profitable is a really big deal, and if you are someone that like considers macro, this might be your thing here. So like in light of the Evergrande collapse and liquidation, how might traditional financial crises influence the stability of the crypto market? And you could take this maybe a different route if you like. For instance, this question is asking about how it might increase the stability, but maybe you have a different opinion.
Thanks for the question. Very good one. So it's a fresh one, right? Every single news that comes out unexpectedly causes certain market distortion, causes certain amount of noise, right? And noise is something that is not retainable over long term. Noise is random most of the time. So what you typically see in the times of like Evergrande liquidation notes or ETFs, approvals, disapprovals, the halving, and so on. There's a lot of events, and each and every single one of those events, amplifies the amplitude of the market, right? Of the market fluctuations. So it doesn't necessarily trigger direction per se, right? It does trigger much more volatility. Volatility is a measure of risk in finance. So what it does, it is most of the time not directional, right? It doesn't have any particular directional drift. Instead, it chops around, gives us much closer look to the random walk, and creates this kind of like a 50-50 coin flip chop, right? And why it matters is it matters because if you are aware of it, you can hedge yourself. You can go on the S&P puts, you can go on the VIX futures, and so on. There's also a very cool solution from our partners. They didn't pay me to say that. So feel free to check it out. It's crypto volatility index. They come up. I just enjoyed it from the trading perspective. Crypto volatility index (CVI) is like a VIX, but for Bitcoin, for cryptos. And tracking those volatility indices is basically what translates to the amount of risk you might want to take, more or less. And that translates to the better profitability. Eventually, like I said, those news events, those announcements, those ETFs, those Evergrandes, and so on, if they are not desirable, desirable. Sorry, English is my first language. This is not something that we necessarily want, right? It's just something that happens in the stock market. It can be on the form of the financial statements, the earning reports, and so on. Those are not the directly fundamental things that change the trajectory of the market. They're kind of like there to just give you chop of a wider range, chop you out, lose you some money most of the time, and proceed with the prior trend, which is what it does most of the time. And those trends are very well defined for cryptos right now most of the time. We're talking 60-70% breadth conditions where there's 60-70% of the market of the coins are above their 200-day moving averages, right? Which is if the 200-day average is rising for a long term, over the long term span, let's say weeks and months, especially months. This comments, the market comments itself on it being a bull market, right? If it persistently falls and moves down, it is a bear market. That's not the case in 2023, at least to most of the coins. One of the coins that is different is Litecoin, which is something that is interesting. I used to be a big fan of Litecoin. I used to be a big, what do you call it, like a big bet taker on Litecoin. I was wrong so many times. I'm wrong 50 times a day, so I lost some money there. And funnily enough, I'm bringing Litecoin because it's one of the very few top capitalization coins that is actually moving in its own bear market still. So the whole market moved ahead, pushing to the upside very strongly. Bitcoin 160% up last year, Ethereum almost 100. And we're talking about good candidates overall from the seasonal perspective, from the long-term perspective, for this trend to persist and to continue this year. This is election year. We just went out of an exceptionally strong, powerful pre-election year that was in line with the expectations. 50% on NASDAQ, 22%, if I'm not mistaken, on S&P. Very, very good numbers. And 2024 is the setup, also abnormally powerful setup for the extension of this last year's rallies, even though it might not be necessarily immediate. The historically speaking, since 1949, on an average annualized basis, S&P 500 returns 12.8% versus typical annualized return of 10% approximately. So we're talking about 20-30% outperformance for this year's candidate, where the current president is running for the re-election. That puts us in the positive outlook, positive outlook for the traditional market. So the Chinese market, of course, I'm just taking a look at the chart. The Chinese market for the iShares is actually tanking. You know, it's down 2% today for the FXY. The averages are all trending to the downside. The 200-day moving average is trending down, which tells me that Chinese market, Chinese large caps, and the bear market. 50-day trend is to the downside even more aggressively. Is drifting away from the 200-day falling anyway, and the 200 days is even lowered. So there is a very strongly well-defined bear market for the China that accelerates for the large caps. However, the markets on the US side are not really taking much heat from it. It seems, right? S&P is about to break 5,000, the historical milestone round number. So bullish pre-election year turns into bullish election year extension. And again, 20-30% outperformance versus typical average, cyclical return, annualized return of S&P 500 is something worth considering. Why for Bitcoin is it worth considering? Especially because Bitcoin is getting strong, has been getting more and more strongly attached in terms of the relationship to the traditional stock market. You know, it's been becoming more and more glued to what Nasdaq does, even more so than what S&P does. All right. However, we are talking about the 400-500% relationship growth strengthened by the means of correlation, right? The correlation coefficient, which statistically counts and measures the covariance versus the product of standard deviations. So in those terms, you know, it tells us how Bitcoin covaries with the S&P, with how Bitcoin covaries with the Nasdaq, and it's been covarying more and more and more, basically over the last several years. So Bitcoin is becoming this more volatile beta version of the Nasdaq. And since Nasdaq is in its best made months right now, you know, from the October lows, from the November bounce into the sell and may go away pattern, a little bit extended into June, July. This puts us in the very favorable conditions overall. So Bitcoin is in a bull market, which is a good thing because it attracts liquidity. It is a risk barometer. So many institutions, funds use it as a risk appetite barometer and kind of like a volatility index on its own. This translates to a lot of risk appetite, a lot of investors. If it grows more people jump on the bandwagon, more liquidity in the markets, and more people get interested into altcoins. All right. So eventually the halving hype that is up there in about 75 days in mid-April, might be interestingly bringing in a lot of anticipation. Now we have additional fundamental reason to facilitate that from the ETF side. The institutions are there, BlackRock is there, Vanguard, Van Eyck, all of those people. Vanguard maybe not, right? But the ARK investments, you know, all the big players are here, and they are here on our side, and we are playing in the same direction. So there are a lot of good odds to consider for this year that translate to the very positive, optimistic outlook for Bitcoin. Just two facts for the halving: Bitcoin never lost money in the halving, and it always rallied very hard in the halving. So I don't know about the future. I can comment on the facts, and those are the facts.
Adrian, can I ask a question?
Go ahead.
Why do you think institutions are buying Bitcoin? Do you think they see it as gold, digital gold, or what kind of strategy do they have with it? Because they don't believe in the same thing as we do, right? They're not going to believe it's like decentralized money or something, right? So they have some other narrative. What is that? What do you think?
A very fair question. So they're buying money because their clients are asking for it, right? They're businesses. They make money off clients. They make money off services, and in order to be profitable, they have to meet the market demand. So they're answering the market demand and providing the supply to it to facilitate this rising demand. So it is a sign of times, and it shows you the rising demand in the first place. On another note, I do not necessarily feel they would have. I might be wrong. I would not necessarily bet that they have some special mission to heal the world and to save the world with Bitcoin. Because for many different reasons, it's just an asset class to them, right? The cryptocurrencies are just an asset class. It's like next to stock. And the good thing is, I can give you another example from the central banks, right? So there is a Basel committee as an official supervisory kind of like a body for central banks globally, that in 2022 in December, they released an official recommendation paper for the central banks globally, so that until January 2025, the first January 2025, the official record and the official recommendation from this committee, Basel committee, is that the central banks should own 2 or more percent of reserves in crypto assets, in tokens, in stable coins, right? They're classified differently. Eventually, they are to be measured. They are to be measured by the individual risk assessment, right? How much they may invest. Otherwise, the central banks on our side, central banks are officially recommended to hold 2% or more of their reserves in cryptos, right? So it's and the reason is for it financial, right? I don't think they care about
Diversification.
saving the word with Bitcoin. It's diversification.
No, of
Bitcoin,
course not.
Bitcoin's sharp ratio is 1.65, right? S&P is 1.5, 1.3. So Bitcoin is far better
Great.
diversification tool than S&P, for instance, right? The capital works per unit much better. It generates more returns per the risk unit. So the Sharpe ratio, Sortino ratio, Trainer ratio, all are more positive for Bitcoin, even though it's more volatile. The annualized volatility for Bitcoin is right now like 55%. The annualized gain is still going to be, 100%, for instance, 75%, 100%,
But what with
120%. Last
the
year it was 160%.
what's with this digital gold narrative? Does it have any merits, for example, for pension funds? And because the pension funds, when they buy it, they don't buy it because their customers want it. It's because they wanna, they wanna accumulate funds so that they can actually pay pensions, right, for the people. So is there any does it stick, or is it a stupid narrative that Bitcoin is digital gold for anyone from the traditional finance universe?
Mhm. Very good question. Uh, I cannot sadly see who's asking. Is that Michael? Who's asking the question?
That's Michael.
Yeah,
Okay,
yeah.
good to know. Good to know. Thanks, Michael. Just didn't know this. Yeah, very good question. So, digital gold again. It's a little bit of a narrative. It can help, and it can not help. It's just a narrative is an opinion. It doesn't really influence the facts per se. The good things and the bad things about opinions is that they are self-promoting and that they are self-fulfilling at times, right? So even though it doesn't necessarily have to be the digital gold, it may turn into a digital gold effectively, because people want it, right? It's just like what someone asked Jay Powell one day, why Fed would stick with the 2% inflation rate as the healthy one, right? And they said because of the anchoring effect. He literally said that and admitted in front of the people is just because they tell people that it's 2% and the market, the whole economy adjusts to it, right? So, as a matter of fact, if we keep repeating that it's a digital gold, just maybe turn into a digital gold. I think, it serves the purpose of a fragmentalized digital gold to a large extent. RWAs, tokenized RWAs is a very good concept that is hot this year. So it subscribes itself, into this digital real world asset to some extent, real world commodity, if you will. So long story short, regardless of our beliefs, I mean, I do not necessarily love talking. It's in my case probably just a waste of time to, if I give you my opinions because I'm wrong too often, right? Uh, however, digital gold is a very fancy term that can take us far and beyond, right? And in terms of if it is equal to digital gold, I would say no, because digital gold would mean that it's an exact gold but digital, right? In the first place, that would mean that the correlation is 100%, right? Is 1 0, which is not the case. Bitcoin, in fact, quite often trades quite oppositely to gold. So correlation is in constant fluctuation on its own, right? It's never stable. There's not such a thing in a word like decoupling. It's all seasonal, right? For some time, Bitcoin may trade, on the opposite to S&P 500, right? S&P just breaks new all-time highs, Bitcoin went into 1 month correction, and on another occasion, it may work perfectly, in the same direction. So it all changes, it all fluctuates. The world is dynamic, and the narratives change, the opinions change, the facts don't, because the facts cannot be denied, which is why I love commenting on the facts and all. That's good. Thank you for the good question, Michael.
I think if it's gold insofar as it's seasonally trendy to try to have people bet with or against the markets if we're in bear or bull, then I think there's that hope. Obviously, we saw with interest rates not truly driving price movement, and of course the market's doing it and not actually being 100% correlated. People have just still had questions, but I think there's like the self-fulfilling prophecy comment you made was awesome, because a lot of these guys that run endowments, retirement funds, etc., they commiserate and hang out with each other and don't want to be the only one who isn't doing it. So a lot of it's looking at parity of holdings and making it a commonplace to have that percent be in a Bitcoin ETF or a crypto type asset or digital asset. And so I'm hoping that becomes the quote unquote norm. And then that becomes the commonplace for everyone to hold that percentage within the TradFi fund management strategies. And it all happens at conferences. Right now in Miami, there's the VCPE conference. A bunch of people down there talking to each other about how PE funds do their thing. I know it's very different, but it's like these guys all hang out and they kind of just gossip with each other.
So,
Yeah.
so all last year we saw the narrative of various banks collapsing, and then Bitcoin would just continue going up off the back of this seemingly bearish news. So, kind of like to the core of the question with Evergrande collapsing, like I guess I wonder if anyone here thinks that this is going to contribute to more people hedging into Bitcoin or buying Bitcoin because they see the financial markets collapsing, or various like financial infrastructure collapsing. Yeah. What do you guys think?
I'll just say quickly that I think in the short term, these events, banks collapsing, liquidity crunches, 2008 liquidity like crisis events, all of these different, COVID, in these times, kind of everything crunches, oddly, even gold, which is just kind of very doesn't make sense, right? You would think everybody would flee into gold during like a time of COVID where businesses are collapsing or people are fearing businesses collapsing. But because of the way these markets are so intertwined, and because asset managers have to, liquidate in some case their most liquid assets like gold or Bitcoin, to cover their their leverage positions that they need to close or whatever, these kind of things. You see everything retract in the short term. So like, banks collapsing, crises, they might hurt Bitcoin short term because it's like risk off time. But in the long term, these things are great for Bitcoin. The more uncertainty, the less trust people have in banks, governments, and these old institutions, the more people start hedging with Bitcoin. So I think that all of these kind of things, while they may not make Bitcoin go up that day or that week or that month or even that year, these things are long term Bitcoin and crypto rocket fuel.
The term I remember I was looking for is beta. If there's a universally accepted beta for Bitcoin right now, which there isn't, I think the uncertainty of the beta of Bitcoin is actually a good thing, because that way it's not like guaranteed that when we're in bear, Bitcoin will go up, and when we're in bull, Bitcoin should go down. I think that's kind of in the grand scheme of things, when people look at the capital asset pricing model, this is what they're trying to use to predict. And so I think that's kind of remains to be seen if there's a consistent beta, but I think it's good that if there isn't one, at least for the time being, we're all going to have our own theses that lead to what the outcomes are. Is kind of what I've been seeing, at least for the hardcore asset managers, and how they look at it.
I feel like for sure human psychology plays into this too. I mean, yesterday we saw the market dump right after the FOMC meeting, and even though they didn't have any significant thing that they did at the meeting, just the way that Powell spoke about it, the uncertainty, and a lot of people were expecting rate cuts in March. So I think that short term, like Rock said, it will affect it, but long term, it definitely is the definition of why Bitcoin is good. But I look at the ETF as kind of like the before and after event in crypto, and I think that will have a multiplier effect, which is kind of this this theory that Bitcoin demand will just increase at a greater rate generally, not just through the ETFs, but because of the notoriety and the stamp of approval. So what Rock said, the trust, now it just gives it that trust. So advisors can push this now. They can actually, their self-interest for it, they will make money from it. So they're actually pushing this. And Michael mentioned early on in this space, we saw Google Ads now. So I feel like, Bitcoin is just gonna become a household name, and I feel like that's just crazy and good for the space. But Fidelity, Grayscale doing Google Ads, they're gonna soon be on TV, and companies like Invesco, Galaxy Digital, who are trying to get into the game now. Imagine each of these companies will bring their own clients and funds into Bitcoin. There's new money from all directions. But I feel like in general, Zara had brought up a point earlier on that I think obviously it seems like it's kind of like a good and a bad situation. And especially I feel like now we're talking about Ethereum ETFs, and I think we talked about Bitcoin ETF a lot, and I kind of want to hear your guys' thoughts on the Ethereum ETF as well, because from what we saw happen with the Bitcoin ETF, 3% of all Bitcoin is now owned by all these ETFs, and which is Bitcoin is actually built kind of in a more decentralized way than the way Ethereum functions. So Ethereum being, proof of stake, would that, because if an Ethereum ETF comes up and sucks up a huge percentage of supply, how do you guys think about that? Do you think that's negative for decentralization? Do you think it would be better if it's delayed a little bit until maybe we can figure out how to proceed?
I'll just say thanks for letting me speak. I'll have to run. They're very good questions. Tina, Michael, and everybody, Rock, thanks for hosting. You guys are awesome. Keep cracking it for that.
Cheers. Give
going,
EVERGRANDE a
brother?
follow, guys. He's got some good info.
Hey guys, could I jump in real quick?
Yeah,
Want
please.
Thank you. Yeah, just want to give a little different perspective, right? Being a meme coin and just kind of in the meme community, or degens as many like to call themselves, right? So I had a couple key phrases that I think if no one knows better than a meme coin, right? Volatility. If meme coins don't know about volatility, I don't know who does. Narrative, right? I think that's one of the biggest things out there. So we mentioned earlier, the gold, Bitcoin gold. Yeah, I think we, in general, run with that narrative. That's what we want to spread to the massive, right? Like this literally is the gold rush, and you want to get there early. I think pushing that out not just to obviously corporations in general, ETFs, but also just mainstream America. Put that aside. Also, as far as trust and suspicion and privacy and security, from a degen meme side of the fence, right? Sometimes, when you see projects launch that initially look, suspect, right? Sometimes those are actually like the best ones. And on the flip side, some of the ones that look to be too good to be true quite often are too good to be true. I just want to just also touch base real quick on someone mentioned earlier, kind of having that Smokey the Bear kind of, spokesperson. And I think that's so important, just once again, to get that word out and really start spreading crypto to the younger communities. I've met so many people over the last, couple of years that are, in college or in high school and really getting into it. And I think we want to just continue educating not just them, but also, the younger generation, and having kind of that Smokey the Bear or Mammoth of Matic kind of, presence to help that outreach and build storylines and really simplify it can really just, help grow not just Matic, but obviously just crypto in the future as we continue to grow and expand. And that's just one thing that we're really looking to do, is kind of help build that narrative and expand and really simplify it, but make it fun as well.
That's great. I actually think that it almost makes sense either from the platform level for these platforms to either like Polygon or any of the other big ecosystems to build some kind of animated series or kind of educational content like you're talking about. Or it's got to be the NFT and meme coins. It's like the NFT projects and meme coins have really great IP, and some of that stuff is really friendly and kind of probably plays well into the education side of things. So I have to agree. But back to or Rock, do you want to change the question? Or actually, you know what? Have we introduced David yet?
I don't think so.
David, take 20 seconds to introduce yourself, and then I'll ask a question for everyone here.
All right, guys. I hope everyone's doing okay. Happy Friday. My name is David Okoya. I'm a reporter for Daily Coin, a leading crypto media platform. We focus on providing unique flip side insights to crypto news stories and just demystifying things and taking away the hype from everything so that people can basically understand what's really happening. I'm happy to be here. It's my first time here. I think I've learned a lot. I've heard a lot from a lot of the speakers here. Although I do think that a lot of what has been said has sometimes seemed a bit maybe too idealistic. But I think these ideas are first necessary. Then we can start breaking things down to actually achieve the goals that we want to achieve in the crypto space. So I think I would just rest there for now.
Awesome. Yeah. Thanks for your introduction there, David. Welcome. And then let's also introduce some of the new people that have come on to the panel. So Fubar, go ahead and take the mic. Introduce yourself, just 20 seconds. Let everyone know what you're doing in the space, all that.
Hey there. Thanks for having me. I'm Fubar, founder of Clusters, which is a new cross-chain identity namespace platform we just launched yesterday. So really excited to dive into that and share what we've got.
Awesome. Thank you for your introduction and welcome. And also, Jason, please take the mic. Introduce yourself.
Hey, hi everyone. Thanks for having me. I'm Jason from OKX. I'm Chief Innovation Officer here. OKX is a crypto platform, including an exchange as well as a Web3 wallet.
Awesome. Really great to have you here. Excited about, everything that OKX is doing with Polygon as well. Excited for X1, all of that. So we've been talking about a bunch of different topics overall. It's kind of macro stuff, ETFs. Also, we were just talking about EVERGRANDE, the collapse. Also, the banking issues that are going on around the world. So that's kind of been the themes for anyone that has just joined this space. But to kind of stay in that vein, I have another question for you guys, and anyone can answer the question on this show. You don't have to raise your hand; just jump in, answer how you like. So, the question is: how might global economic shifts impact the perception and adoption of DeFi?
Well, I'll just repeat what I said earlier, and then I'll let others expand on this. But to me, the biggest trend I see in the world right now is a lack of trust in governments and traditional institutions. I think that people are really tired of being lied to. They're tired of corruption. They're tired of being taken advantage of. They're tired of paying so much in taxes and not knowing where it goes or disagreeing with where it goes. I think the world is and there's plenty of polls that back this, is that the world is at an all-time distrust in government and institutions. And I think that's the perfect timing for what we're building here with Bitcoin and DeFi and the decentralization movement.
I just want to add something to that, and I totally agree with what you said, Rock. And I think we will definitely see more adoption of DeFi, especially in the regions and countries that they have more corruption. They have people have less trust in governments, and that's pretty much the trend that has been the trend with crypto as well. If you look at the countries that have adopted crypto most, they are often the countries that have less trust in the government, or their financial means or currencies are really volatile, or they have a lot of political changes as well. And the funniest thing is that because we are a Swedish based company, right, we had exact same discussion yesterday in an event with some Swedish friends, and they have a totally different opinion, because in Sweden the people have a total trust in the government, and they thought they absolutely don't need. There were some people that they thought they absolutely don't need DeFi solutions or to use them, because they thought the whole world really trusts the governments. And I had to really have a little bit of eye-opening sessions for them to the rest of the world, that Scandinavia and Sweden is probably a little bit different in that sense. But I totally see DeFi mass adoption eventually getting better and better in that sense. But I want to just take advantage of this time here. Now, I have a question for Jason. Actually, when I saw Jason coming, I was like, okay, that's a good timing to ask a question from Jason. I really want to hear Jason's point of view on Bitcoin ETF, because you are representing a centralized crypto exchange. Now, how do you feel Bitcoin being also traded on centralized stock markets? What do you see here, and do you think that's something that is going to support your business as well, or do you think that's against the whole decentralization concept?
Thanks, Sarah. Can you hear me okay, by the way?
Yeah,
Yeah,
perfect.
Okay, thank
perfectly.
you. Thanks for calling me out also, but happy to share some thoughts.
Sorry
I
for
think
that.
no problem. Happy to. I think that's why we're all here. I caught the tail end of some of the previous speakers talking about the Bitcoin ETF. And I think that's fascinating because from our perspective, it's probably a little bit different, right? I can only speak to what we're seeing on our platform, but generally the Bitcoin ETF was extremely positive, and I'll dive into a little bit more there. But if you look back historically, I mean, Bitcoin has been gradually being adopted, and more products have been built around it. I think the best example was probably the CME futures, the Bitcoin futures product years ago, and even then, you could see that these events only drive to increase acceptance and adoption, particularly from institutions. But I think even now, with more money flowing into these ETFs, you can kind of see the retail aspect, just not on our platform, but being affected on some of these brokerages and the ETF providers. So what we've seen from institutions is that clients that we had been talking to that were not as active are now eagerly looking for places to hedge and perhaps source liquidity, but also execute a wider variety of strategies that they couldn't do in the past. So having all these different venues to trade Bitcoin across different audiences essentially brings the market, allows sophisticated market participants to really trade more, frankly, and that's beneficial for all of us trading venues. So one caveat is we don't provide or offer services in the U.S., and so we don't directly work with any of these U.S. Bitcoin ETF providers. But a lot of the market makers that do on a global scale, we do see them, and we see their activity as a positive. So I'll pause there.
So you could look at these ETFs as, and this happens a lot with a lot of different products, is where you can look at something as either a competitor, or you could look at it as kind of a partner to lift the entire market. And so you can say, well, will these ETFs kill OKX, who Jason is speaking from? Will it kill their business model, or will it take away from their business model, or will it help it in some way? And I actually think with many of these things, it's against what your intuition, and I think it actually helps, right? And you actually mentioned, Jason, that the market makers that are working on these different things. So the way that these Bitcoin ETFs are settled, they require, I think they require basically market makers to settle with them. Like a user or an institution can't go directly give Bitcoin to BlackRock and then they give them ETF shares. They actually have to give them cash. Then BlackRock has to source the Bitcoin somewhere through some kind of market makers or something, I think, right? And so those market makers, if they're bringing that Bitcoin to that ETF, they need to buy it somewhere, and they very well may buy it on OKX or Binance.
Hey, real quick, I know we're in this this conversation, and Michael's going to jump in right now. I just want to shout out that Owen's here. We also have Ryder and Manam and Zodomo that all have joined us. So just shouting you guys out real quick, and we'll just jump right back into the conversation. Michael, take it away.
Yeah, I just want to ask Jason a question because he's here and kind of follow up, add some color to what Rock said. So the thing is with Europe, okay, because I live here, right? I don't want to say we because I don't agree with what Europe is doing, but Europe is kind of a bit of afraid of self-custody of anything, and especially of crypto. So they are looking at, limiting how much you can hold. Now, if I buy crypto on OKX or Bybit or whatever, then if I withdraw it, then I withdraw it in crypto. I have self-custody. Now, if I withdraw like 50K, I mean, it's not yet legal, but it will be illegal to hold so much money in self-custody because Europe, all right, not cool. So, Jason, what do you think about this? You maybe know even more than me about this development.
I think you certainly know more than me. I would have to defer to some of my European colleagues, specifically around regulations and upcoming regulations. But I think broadly, our approach is that we want to we want to make the market, the users, but also all of our stakeholders aware of the benefits of self-custody. I don't think it's evil to hold your own assets in your own manner whatsoever. And our stance is very much on a policy side and working with the regulators to try to educate and convince them otherwise. I think just slightly back to the ETF. I think one thing that was most interesting for us talking about self-custody is that we saw what happened with FTX in 2022 and other platforms where these platforms are essentially asked to custody assets for users, right? And they did not uphold their end of the bargain. And ironically, self-custody is the solution to these issues where users are trusting centralized entities with assets. And if you're preventing users from withdrawing crypto assets, I think that only furthers and concentrates some of this risk. But yet, we are doing things like proof of reserves, where we can at least try to, in a trust minimized way, prove, or at least and allow users to prove themselves that the entities or at least us, OKX, we have the assets that you have put with us. I think that's very important. And just this is the point I was making about the ETF, is that it was fascinating to see Bitwise also a TradFi product reveal their Bitcoin addresses. I guess it could be counted as a proof of reserves in a basic way. But again, sort of completing full circle now, you have TradFi products that also you can go check and see if they actually hold the Bitcoin that they claim to. So, there's not one perfect solution. I hope European regulators listen to what users want and their citizens want, and self-custody is permitted.
Yeah, if you don't mind if I jump in on that one as well. So you can probably tell by my accent, I'm based in Europe, I'm based in Ireland. And yeah, the recent regulations that are being pushed through, I would call them extremely anti-consumer. They're nearly anti-person more than, I won't even say consumer, it's anti-person. So my thing with the ETF was that, I was happy that it was seeing like this kind of legitimizes Bitcoin, and it allows people to, who otherwise would never have exposure to Bitcoin, to have it in, their pensions and stuff like that. That's great. But I think if you're actually interested in the space, I don't know anybody who wouldn't just go straight for self-custody every time once they know what they're doing. I mean, way back in the day in 2013, 2014, so I've talked about rug pulls back in the day a couple of times, but I think the worst rug pull I was ever caught by was I was working with a guy who essentially raised a load of money to buy an exchange, and then he got myself and a lot of other people from the early Dogecoin community to use that exchange. He bought that exchange purely to rug pull the exchange. He fled to Japan. He got caught. He was deported, sent back. So the happy-ish ending at the bottom of it all. granted, he went to prison. Coins didn't come back because things were so new back then that judges didn't even know what they were, dealing with. But that was when I kind of said that, self-custody is the only game in town. And when it comes to ETFs, I find that it's another case of not your keys, not your coins. And like, I'm happy that there's exposure available for pensions and stuff like that. But I have always said, even the exchanges I would hold in the highest regard with the highest amount of trust. I just use them for on-ramp and off-ramp. Once I go on-ramp, it's coming out to my own wallet. There's no way in hell I would let somebody else hold my crypto for me. Now, what the EU has kind of run in with now with their new regulations where, you essentially cannot self-custody if you're over, a certain level of liquidity or, a certain level of market holdings, stuff like that. It's unusually dangerous, especially when it comes to the side of like, your Uniswap markets. Like,
Wait, is this live
swap.
now?
No, not live yet. It's in the works at the moment. Michael, you might correct me on it. I know I was sent on documents only about a month ago, which were outlining basically the limits that are coming in around DeFi, decentralization, and essentially, QuickSwap and other decentralized markets. They become nearly off limits for a lot of people in the EU. Nearly dangerous. If you jump onto QuickSwap, you pick up a lower market cap coin, it shoots up in value, and all of a sudden you have an illegal self-custodied wallet. So
yeah, exactly. They want to have it. The goal is to have it from 2025 to come into effect.
Yeah.
But let's see, right? But the fact that they're even thinking about this stupid stuff makes me quite uneasy, because
Yeah.
Europe is not really here for growth or for giving you freedom or something. It's actually for maintaining status quo, and that's what
Yeah.
is the reason behind it.
And that was kind of my thing when it came to the EU and crypto in general, that I genuinely thought that, Europe, like the EU in general, I think everybody can agree since 2008, it never really made a full recovery. Like, some countries in the EU did well, but overall, production and output, it's quite low. America recovered, shot up, did great out of it. We've got kind of, the newer power blocks that are, well, not so much new, but, China obviously did great through that period. And we saw Russia kind of come up and go back down in that time. But I always thought that for the EU, our future is likely going to be in crypto assets, because, famously, the EU is a very banking centric continent, especially with the UK. And obviously Brexit has changed a couple of things with that now too. And Germany, other countries as well. Then we had, very powerful banks. They all got hit very hard in 2008. But my general thinking was, as crypto assets come into form, I think that European regulators would likely be the most forward thinking, and that would be kind of, the new status quo that would come from the EU, and how essentially it was a return to relevance. I thought it would all come from, the modernization of cryptocurrencies. And now we just see it. I would go as far to say that, like, there are some states in America that, while still having some, backwards policies, are still more crypto friendly than what the EU is turning out to have overall, especially when it comes to DeFi and, DAO spaces and stuff like that. So I'm the founder of Nova DAO, and we're not registered in Europe. We registered in Wyoming in the US because they have the most forward-thinking laws that actually protect people. Like, and that's kind of,
that's surprising.
I find that crazy that it's, we have to register in Wyoming, because there's nowhere in the EU that would allocate the same level of, I suppose, trust and security. In the EU, it's more, I suppose the protections in the EU are like, just don't start anything ever. And that way everything is safe. That's pretty much the EU stance on it when it comes to crypto. And then you've got states like, Wyoming, where they brought in very forward thinking, DAO laws in particular, or DAO regulations rather, I should say, that, our DAO as it stands right now, we're able to enter legal contracts with, brick and mortar businesses. We can own property. Like, there's so much kind of available to it. And there's also, that safety is also afforded that, this is a decentralized organization. And if somebody within the organization, say if I turned around and, well, obviously I wouldn't, but if I was the type of person to turn around and take funds out of the treasury, or out of liquidity, there is a legal precedent where I would be charged and I would be held accountable for that because we are registered. So we have all the protections that we need. We have the ability to, intermingle with real businesses, brick and mortar. We have the ability to purchase property if we wanted to, other assets as well. And that came from needing to register in Wyoming. So why is the EU so far behind that I would call that nearly a pretty basic business setup in a modern age, except it's decentralized. It's just protections are afforded to everybody where needed, and we're allowed, the same kind of rights that somebody operating as a business would have. And I just thought the EU would be so far ahead on this stuff, and it honestly saddens me to kind of say out loud, as we really fell behind when it came to, foundries. I thought that we would be essentially housing our own, TSMC and stuff like that in Europe. As we have a lot of the EUVL tech is developed here, but it never happened. And a lot of that came down to, again, there were, stringent regulations against starting up these types of businesses. And look, one side of it as well is that there were zero tax benefits to doing it either. So why would you set up an EU? And then when it comes to crypto, I'm just seeing us doing the same thing. With AI, we've already shot ourselves in the foot. I mean, we're talking about banning ChatGPT at times, which is just insanity. So, yeah, I think that the EU right now, quite frankly, is making me a bit sad in how we're approaching all of these kind of, modern day fields. And I think if something doesn't drastically change in the EU over the next 5 or 10 years, we're really going to find ourselves relegated. I mean, yeah, we fell behind after the 2008 financial crisis, but we're still relevant. But I think in another 10 years, if we are not making, good strides in either cryptocurrency, AI, or, in foundries, as in chipset foundries, then where does that leave us? Are we just surviving?
And at least
Sorry.
At least crypto is paying for us moving to another country, okay? So get some Bitcoin and make some money to be able to move your family somewhere else,
Yeah,
because it's over.
and man, that's what.
You know what you gotta like? It's almost like at this point, I think this will become a real thing. Like digital nomads will become a thing where people just move. Hopefully not often, but as countries get tyrannical or socialist or too high of taxes, people will just move to other countries.
Yep.
I love America so much, and I really do want to. My kind of dream is to get into politics, so that's why I haven't pulled the trigger yet. But every week I spend at least a few hours researching moving out of the US, or maybe like Puerto Rico, or maybe renouncing citizenship. And it's a combination of, way too high taxes, way too high regulations, the government putting us constantly in fear, working in this industry, trying to build great things for people, trying to help the world, but still being in fear that we're not doing, we're not following the rules because the rules aren't clear. But I think, jurisdiction arbitrage or jurisdiction shopping and moving to other countries or states is definitely, we're going to see it more and more as the world becomes more less physical and more digital, as work becomes more remote, right? Like 50 years ago, there was no remote work, like almost none. Now, remote work, I don't know, what is it? Probably 20-30% of work is like, if I'm just making up numbers here. But I think as we get more digital remote work, as we get more into digital economies and people have more alliances with like virtual communities than their own, at home communities, I think we'll see that more.
Yeah, 100%. And see, here's the really this is the real dystopian part about it. So to circle around on that, like I'm actually, so I'm not going to be an Irish taxpayer this year. I'll be living over in the Emirates for, the 6 months that are required to essentially ensure that I'm able to work under, the regulations and the tax rules that they have over there. As Irish tax law in particular.
You're moving to Dubai?
Yeah, I'm going to be 6 months over there, and I'm going to be 6 months in Ireland.
Wow, I gotta hear more. We'll talk offline about this. But
yeah,
I gotta know. Actually, tell just a little bit. Give me a little taste. What's going on with that? How does that go?
No, it's so I mean, I've been working in the space with a lot of people over the last year or two, and a lot of them have essentially been getting residence in Dubai, and a lot of it is due to fear of regulations that are starting to come in on top of it as well. Taxes are obviously a huge part of it as well, as the Dubai tax laws are essentially 0% on capital gains, as compared to Ireland, where capital gains is 33%, which is one of the highest in the world. I have the bank wires that I had to put
Bro,
through
I'm
to
at
revenue.
54%. And that's
Capital
just base.
gains?
That's not including, like, when I add up all the different taxes I pay, I think it's probably closer to 70 or 80%
Jesus.
in California.
Yeah, so pure income tax, I'm at about, I think it's like 49 or 50%. But yeah, so that's shocking to begin with. But crypto, when that comes to 33% of that, it's essentially working out as, you know, I'm paying a lot more than I would pay on income, that kind of thing, particularly with trading. We also have some frightening laws around like perpetuals and futures, where that's counted as income. So if you do, you know, one good trade and let's say you're up 10 grand and it turns out, you know, you wreck yourself on the next trade, there is no relief from that. You still owe the full income tax, like, you know, 49% of that 10 grand that you had already won. So it's
This crushed people in 2021. And keep this in mind, guys, moving forward, because this literally, I mean, this for like Lunar Digital Assets, for my own personal and many of my friends. And, you know, we talked to our CPAs about this, and it's like so much of the industry was crushed by that fact. I think what you're talking about is the fact that if you trade and it's income, I'm assuming that, I think that's what you're talking about, but I'm talking about if you receive any crypto assets as pay, those are seen as income. So now let's just say you receive $1 million. Well, if you owe 50% in California, just a round number here. So, okay, you owe 500,000 in income tax, right, on the $1 million. But then, you know, just like 2017 moving into 18, and just like 2021 moving into 2022, it happened the exact same way in the exact same months almost. When the next year things all crash, you just locked in those, you know, you had that income last year, but now those assets, that $1 million you received might be worth 200,000, but you still owe 500,000 on it as income, because capital losses do not cancel income. Capital losses only cancel capital gains. And so you're stuck, you have these capital losses stored up. I still have millions of dollars of capital losses that have been sitting for years that I don't get to use until we have a bull run, or until the markets, you know, stock markets and crypto markets get better. But then you're stuck, you know, having paid, you know, 2, 3, 4, 500% taxes for those years. And then you're forced to liquidate assets to pay those taxes. And you don't want to liquidate assets in a bear market, right?
absolutely. And this is the thing as well. There's a lot of kind of gray area in it too. Like, let's say you get airdropped a bunch of tokens, and it turns out, you know, those tokens are worth 50 grand. They sit there for 6 months. You might not even know they're in your wallet, but then it turns out it gets rug pulled and now it's worth zero. Well, you receive that as income. So it could be argued that, you know, this is something that,
Airdrop is income.
Yeah, airdrops are income.
Wow.
Yeah.
It depends on the country. Actually,
Yeah,
in
it's country
Austria,
by country.
it's not. It's not. But NFTs are income as well. So here where I am, that's fine.
Did you say Australia?
No, Austria, Europe, Austria, where
I
most
think
are different.
Australia there has pretty good rules about that as well. Actually, I know the product lead for QuickSwap, Alexi, he's in Australia, and he was saying that, like, for example, if you take I think staking income, but also just like vesting tokens. If you receive vesting tokens, you don't pay tax on them until you sell them. I think that probably goes the same for like equity income.
Oh, yeah.
But in the US, it's not like
in
that.
In Europe, it is straight up. If you're staking, then that's income. So
That's income unless you're staking to secure the network. So if you're staking properly Ethereum, then it's not income.
It's country by country again. So I think in the UK and I believe in Ireland, it is just income, as in like the minute that. So staking to secure the network, I'm not 100% sure on that one, but a lot of the staking farms that you would use, say, at the top of a bull run, as in, you know, degen farms and stuff like that, it's just income. And, you know, you could easily receive, you know, 20 times your initials within a day on one of those farms in the middle of a bull run. Unfortunately, it is worth zero the next day and you didn't sell. So there's a lot of
and you still owe income tax. Yeah. So, like, for example, quick tokens that I received for working on the project, they were seen as income, and now I never sold those. Still haven't sold them. but I had to pay a shitload of taxes on that. And I never will sell those probably. I'm not saying promising, but I probably will never sell my Quick tokens. And I still had to pay a ton of taxes on those, on money I will never get, never receive, never see.
Yep, and this is
Hey, not to cut off the tax stuff, but taxes is like state by state, by country, and it's kind of different for everyone. So so just to let everyone know, we're not giving any advice.
Oh yeah,
Quick disclaimer of any kind.
We should probably move back
real quick,
to the main topic.
That's what I was trying to do. Real quick, I'd like to shout out that NARB is here, and I think NARB is. Oh, David 10x is also here, so shout out to them. So we can go to another question.
Narb and David.
But, yo, what's up, guys?
Yeah, good to see you guys.
Were you still wanting to do the?
So for the
I think you had like a
I've got
Roman
some
Coliseum
It'll
thing.
be really quick. I've got some rapid fire questions for you guys.
This sounds fun, man. Let's reset the room then. I think you have like Polygon questions, right?
Yeah. So what I've got lined up here is just it'll be really, really quick, and I feel like Rock and Aztec are going to answer them right away. But it's just some rapid fire questions about Polygon's history. So we'll see who knows the history of Polygon and who are the true OGs here. So if you guys are ready, maybe Rock and Aztec should just kind of shut up for a minute.
Yeah, we'll turn our mics off.
We'll see how this goes.
Unless no one answers.
We'll see how this goes. All right. So first question is, what was the first scaling solution type that Polygon worked on that at the time many believed was sort of the holy grail of scaling? What was the first type of scaling solution that Polygon worked on?
I know this answer.
You will absolutely hear me clicking on a keyboard if I try to invent that. I know the answer.
I'm going to jump on Plasma.
I always thought ZK. Like, I remember hearing about Polygon with ZK tech back in like 21 or 20, or somewhere around then.
Oh, yeah. No, this was years before that.
Darren, don't answer.
Someone whispered it or said it.
Yeah, Darren, don't answer. Darren is also a wealth of knowledge.
Evil laugh.
Somebody answered right. I don't know who it was.
Yeah, someone said it quietly. They were unsure.
That was producer Darren. I know his voice.
Darren, come on, man. All right, yeah, it was Plasma.
Okay,
yeah.
It was Plasma. You're right. Okay, next.
So Plasma, it was interesting. Maybe we could add a little flavor to that. So that was originally what Matic Network was doing, and that was going all the way back to, I want to say they first started the concept in like 2018, and I think then they went with Alpha Mainnet in like 2000. Live went in 2019, I believe. And fun fact, we LDA actually made the premiere video for that, but with custom, like actual real music, not just like produced, but like real instruments. It would be cool if we could find that video. It was a fun one. But anyways, so yeah, Polygon went with Plasma, and at the time there were other people trying to do it. There was Omise Go was was like really the crowd favorite, mainly because Vitalik had a sticker of theirs on his laptop, and I don't know if he was officially advising them or what. I forget the exact details, but Polygon Matic at the time completely crushed Omise Go. And Omise Go was like, I mean, it was probably, I forget, but I think at one point it was probably like a top 20 or something project or something crazy like that. And Matic completely crushed it over time. But it was cool to see that team working on Plasma, but Plasma kind of fell off. And so Matic at the time went with a hybrid, actually, of Plasma and Proof of Stake. And you could actually bridge using either. And I believe even still to this day, it still uses Plasma for the Matic to Ethereum bridge, meaning not the
I was about to say,
ERC20.
like, Plasma did happen. But yeah, it obviously, it didn't solve the problems that were kind of more inherent to scaling and stuff like that. But it's fun. Like I know that there was plasma bridging and stuff like that available on Polygon, or well, just on the Matic network back then. But I do remember OMG making that their huge thing at the time. And dude, OMG they were huge back in the day. Like I remember they had a very minor resurgence too.
I invested in them.
Yeah.
In like 2017 or something, 18, probably 17, I think.
Yeah, man, like they made a little bit of a resurgence back in the 2021 market, but I think it was just, bull market kind of resurgence and everything was going up. But yeah, people were bullish
Yeah,
on Plasma
they
again.
actually asked QuickSwap. They wanted us QuickSwap to launch on their OMGX chain. I guess at the time politely turned them down because we were just focused on Polygon. But yeah, I think maybe that's when their resurgence was.
Yeah, I mean, just thinking now, if they wanted to do a resurgence nowadays, I'd actually be interested again if they became one of the Polygon ZKL2s. Like that would be pretty cool.
Ooh. Let's make that happen. Someone reach out, Darren. Let's reach out to them. Actually, that would be sick.
Make it happen, Darren.
So we were going to do like a rapid fire, guys.
Actually, I know I like this a little bit better.
No, I'm just playing.
Oh, sorry. Yeah, I'm just derailing. Yeah, sorry. Back over to you, Narb. Go for it. Make us all feel like young Zoomers again.
As you guys can tell, yeah, Rock he knows his stuff, so he's probably going to explain, give a little background on every one of these questions. But speaking of ZK that you brought up, next question is, how much money did Polygon dedicate to their ZK technology fund back in August 2021?
Shit, I remember this one because I made a deal out of it at the time. I know it was over 1 billion. I think, did it go up towards something like 3 billion at the end or something like that?
Does anybody else know?
This would be a good multiple
So
choice one.
it's either 1 billion, 500 million, 2 billion, or 3 billion.
I'll go for a straight one.
I'm going to lock in that 3 because I remember talking about it at the time and just saying this is an astronomical amount of money to spend on something like that. Maybe I'm wrong, but I remember hearing 1 billion and then hearing it went up from that. So yeah, I'm going to stick with 3.
I thought the official that they allocated was 1 billion, and they actually spent 400 million. So what they actually spent directly on it, and this is not including paying all their internal team on this stuff.
You're talking about acquisitions?
Yeah. Yes. So do you want to go ahead?
Yeah. So in total, the fund was initially, at least from like the documentation at the time, it was 1 billion. That's what they initially stated, at least. But yeah, in terms of acquisitions, I think between because there was there 2 or 3 acquisitions that happened? Because there was,
more than that, but 3 major ones.
The 3 major ones, I think you're right. Somewhere around, I think I remember that number, somewhere around 400 million. But yeah, the initial fund that they stated was 1 billion, which was pretty crazy at the time because zero knowledge was still like sort of fresh in 2021, right? And a lot of people at that time also thought that a full-blown ZK EVM would be like 5 years away. But Polygon ended up launching their ZK EVM in early 2023. So things definitely started to ramp up quickly at that time in terms of zero knowledge technology, in terms of like the research and the development and all of that. But at that time, really, Polygon sort of was, I would say, ahead of the game in terms of ZK tech. And now I think today, most people would agree that they have the best ZK tech and the best ZK teams. But yeah, 1 billion that was August 2021 when they announced it. Obviously, they were looking into zero knowledge technology way before they announced $1 billion fund into it. So yeah, Polygon was pretty early to that.
Yeah, they spent 400 on Mir, acquiring Mir. And Mir they're the inventors and creators and now current maintainers through Polygon of the Plonky and Plonky 2 prover systems, which are like different.
So that was my next question.
Oops.
So we're gonna skip that
Rock,
one.
you're so good. You're so good that you could even answer the next question, man.
Sorry. Well, I'll just finish with the other parts, which was 400 million for Mir, 175 million for Hermes, and 75 million for Maiden. But that's not including, all the internal, they have a team of, I think it's currently like 400 to 500 people. I think 80% of those are engineers, and they're all also, working together with these teams to build all this stuff out.
And that was his next question after that.
We're good. My next question was going to be who was Mir before Polygon acquired them, and what do they work on now for Polygon? But yeah, Rock pretty much just answered that. But the next question I have is a little bit different. This is a very tough question, and there's no way that
Hey,
Rock
wait,
and
Narb.
Aztec are gonna.
Narb, I missed this, man. My bad. Just who was Mir? I actually don't know this. This is.
So Mir is now, like Rock said, they were acquired for 400 million, which, by the way, that's a huge number. But they are now like the Polygon Zero team, and they're behind Plonky. So there's Plonky 2, and for the most part, like every other ZK team, like outside of Polygon, uses the Plonky 2 technology. So like a lot of other ZK teams have. I guess I could use the word copied Polygon ZK tech. Some of them even didn't give Polygon credit, but we won't get into that. But yeah, they're the team behind Plonky 2, and almost I believe Plonky 3 is coming out soon.
And just to jump on that one as well, and this is more for everybody else in the audience, when it's like, that people, as we said, borrowed some Polygon code as well, but Polygon made a lot of this open source. So, I mean, it's probably the most altruistic move, to all of us. Yeah, it's literally the most altruistic thing you can do. It is, as I've said, ZK tech is kind of like having a nuclear engine in the time of steam and coal. And this is essentially like somebody just invented the nuclear engine. It's more like nuclear fusion engine back in these times. And then just said, hey, this is going to make the space 1,000,000 times better. So here it is for all of you.
I mean, Plonky specifically as the engine is like just this incredible technology that's like other people trying to do these proofs, which are to zoom out these mathematical proofs that basically you can take, let's just like hypothetically say, and it's the technology is not done yet. It's not fully baked, but the concept is you could take, a ZK EVM or CDK chain, like, we had OKX on earlier. They have their X1 chain now that's, I think, live. Their testnet is live, and then they'll be launching the mainnet soon. So they can now do, say, 1 million transactions on this L2 of ETH, and then condense all of that, prove that it all happened mathematically, condense it all into a little 45 kilobit proof, and stamp that to Ethereum. That's the end game. We're not fully there yet. Like it is working, but it's not that small yet. And there's a lot of ways we can get it smaller with, better improvements, Plonky 3 coming, Proto-Dank sharding, and Validiums, or using data availability on like Celestia or Near. There's a bunch of different ways we could get those costs down, but that's the concept. You could do, say, it kind of provides infinite scaling because each of these L2s can do millions, billions, trillions of transactions hypothetically over time, and then just stamp them very small to Ethereum and have the same exact security expectations as Ethereum itself, which is incredible, and solves the scaling trilemma.
And
I bet you 45 kilobit was the next answer, wasn't it?
And one good little segue to throw in there as well is that there's the arguments are kicking off again of what's better, Optimistic or ZK, and you'll never hear that argument from anybody who actually understands ZK and Optimistic. Is that Optimistic, what Optimistic is in the actual name itself. They are optimistic that you are not essentially lying to them when you're putting through anything on the network, and they check it afterwards. I mean, that's how it's so fast. ZK is, we know you're not lying because we have the proof and it's stamped onto the chain. Like it's just nuclear in the time of steam and coal. You're playing on a Game Boy and all of a sudden the PlayStation 5 has just been dropped on your lap. It's like the tech is absolutely unbelievable. And this is why so many networks are using it. And it's why I think I'm so bullish on Matic, to be the Paul token in the future, that this is all going to be used to secure so many of these ZK networks as well. Like you've got Immutable, you've got Scroll and stuff like that as well. And it's all coming under the Polygon banner, which is, I'm really excited for the next 2 or 3 years of this.
Yeah, maybe we should touch on that token portion of, because I think a lot of people get very confused by this, and it's really not that confusing. So there's Matic token and there's Pull token, and people are like, oh, well, I don't know, like what if one is going to be worth more than the other? It's not actually how it works. It's just a simple conversion to upgrade to a new technology. And so the Matic token has just been upgraded to the Pull token. You can hold Matic, you can hold Pull. On different chains, you can use either different ones and they convert automatically. It doesn't matter. It doesn't change the supply. So it's the same thing, just an upgraded technology, because they had to upgrade the token to make it be able to power not just this one chain, but to be able to power an entire decentralized sequencer, prover network that will do the mathematical proofs using Plonky and things we've discussed, will do all that for hundreds or thousands of chains, like OKX's new blockchain, like Immutable's new blockchain, or millions of chains. It very well could be millions of blockchains, especially when you start to get into app chains, which is chains that they just have one application on them. They don't have 10 applications. They're not generalized. They're a single chain. And that wouldn't normally make sense very much, except for that if you get composability, which is coming too, means you'll be able to communicate with other blockchains. So you can maybe do, you can have an aggregator on one chain. You could have, say, Uniswap on one chain, QuickSwap on one chain, and then the aggregator can do a swap using both QuickSwap on one chain and Uniswap on another chain and SushiSwap on another chain, and give the trader, the end result without them all being on the same chain. And it won't matter. It won't be fragmented liquidity. The trader will get the best possible price and experience.
100%.
And it'll provide tons of, so the reason a app might want to do this is because, like, let's look at right now. QuickSwap, or let's use Uniswap on Ethereum. Uniswap on Ethereum has paid millions, probably hundreds of millions, maybe billions. I wouldn't be surprised, in gas fees to Ethereum. But what Uniswap could now do actually is Uniswap could have its own chain, or QuickSwap could have its own chain as this technology progresses. And then what they will do is now, instead of paying a chain for block space, they can charge their users either charge them less for gas and give them a better experience, or they could charge them, say, the same or a little less, and then they take those mining transaction fees, and then what they do is they batch it all together, put the proof onto Ethereum using Polygon CDK and Polygon's provers and Plonky and all this. They could batch it, pay a nominal little small fee to Ethereum, and then they make the extra money. So so that you take gas out of your business model, you're not splitting the money with the miners, your users, like what they're paying to do transactions. You're not splitting it with miners anymore. You are, but it's just very, very small because it's such a small proof, especially after protodank sharding comes soon.
Yeah, 100%. The best thing about that as well, like, this is the real simple breakdown of it. If you're on a chain and this chain is dedicated to, say, one gaming app or anything like that, which, we've already seen in the past. Let's say, you're on that chain, you have a lot of, tokens from that gaming app, and you decide, hey, I actually want to swap this over to Ethereum now. And then you get like 20% slippage because that chain had no Ethereum. So, this aggregation layer essentially means that you will still be connected to all the liquidity hubs. So, you want Ethereum or you want Matic, you're going to go through, QuickSwap for that, or you'll go through, any other decentralized exchange. And this is one of the biggest things in it, that if anybody remembers Phantom, so remembers Phantom is still around, but if anybody remembers what happened with multi-chain, you know, a lot of people on Phantom would have swapped for USDC, which was all provided through the multi-chain bridge back then. And then the bridge was, you know, drained essentially. So your USDC now can no longer be converted to real USDC. So this kind of eliminates all of that mess out of it as well. That when you want USDC, you get actual USDC. It doesn't matter if you're on a chain that's essentially completely nearly like an island for just one app. And this is essentially, I think, you know, Polygon's real killer app that's coming out of it all. I mean, ZK is incredible for speed and security, but actually getting the liquidity of every chain through aggregation, you know, from Polygon POS